here we have Bitcoin. Bitcoin, again, I found this new trend line, guys, and I want to show it to you because it's actually a very accurate trend line. So basically, again, playing connect the dots. No genius calculations here at all. Right there to right there, and look at the high right there. And look at the pullback on Bitcoin the last 2 days off of that level. Now, it's still trading relatively well, but again, it had one daily close above 35,000. Now, yesterday, it closed back below 35,000. That's a little troublesome, right? Plus the resistance level. Now, again, if the spot ETF gets approved, you will see an initial reaction, a big pop. But my thesis remains, whether you pull back into this area first or you go up and then you pull back, at some point you're going to come back to the scene of the crime of this pivot point right through here, right? So again, you're looking at 32,000 area, give or take a little bit as a pullback level. Gold. What's gold doing today off of this news this morning? Let's take a look. Gold is popping. So we're getting a nice little boost up. For me, this is all consolidation. You guys know I've continued to be bullish on gold. This is digesting this big move. So again, you could say, okay, this was Thanksgiving dinner, right? We have Thanksgiving coming up here in the United States. After dinner, can you go run a marathon? No, you got to sit down. You got to watch a little football, digest all that food. That's the digestion going on right there. Or you could use it as a marathon. The gold chart just ran a marathon. Can it run another marathon right away? No, it needs to rejuvenate. It needs to relax. It needs to get some rest. Consolidation is rest. Then it can do its next move to the upside. So 2 good analogies, one for the athletic people out there, one for those that like to eat. I happen to try to be a little bit of both groups there, although probably a little bit more of the first one. I love to eat, I got to admit.
We've got a showdown in the world of Bitcoin. In one corner, we've got Bitcoin, the superstar of the year, surging over 130% and leaving other assets in the dust. Michael Saylor, the MicroStrategy guru, is super bullish on Bitcoin. They've been buying Bitcoin like it's going out of style. Why? Because big players like BlackRock and friends are lining up for a Bitcoin ETF, and that could send Bitcoin soaring. Cathie Wood, the ARK Invest head honcho, is throwing a wild punch, saying Bitcoin is digital gold and could hit $1 million in the next decade. She's all about Bitcoin as a hedge against inflation and deflation. Peter Schiff, the gold bull, is the Bitcoin critic in the ring. He's been taking jabs at Bitcoin, but remember, he's all about gold, so take his criticism with a pinch of salt. Bitcoin is a tough nut to crack. It survived Mt. Gox and is doing just fine during interest rate hikes by the Fed. The SEC might just give the green light to a Bitcoin spot ETF, and that's a game changer. It's expected to bring a surge of investment into the cryptocurrency, and that's got everyone excited. But there's a twist in this tale. The Federal Reserve's interest rate decisions could make or break Bitcoin's price rally. If they cut rates, it could push Bitcoin prices higher because borrowing is cheaper, and people might flock to risk assets like Bitcoin. On the flip side, if the economy keeps growing like a freight train, the Fed might raise rates to cool things down. That could slow Bitcoin's rise. In the end, it's a battle of Bitcoin bulls and bears. Some say it's going to the moon, others are more cautious. But one thing's for sure, Bitcoin has shown its resilience, and it's ready to take on whatever challenges come its way. It's an exciting time to be in the crypto game, and the future is full of surprises. Let's continue our enlightening discussion with Gareth Soloway.
Economic data, the forecasts, previous and the actual. So we saw very clearly here, guys, forecast was 170,000 jobs created. It came in below estimates at 150,000. Now, this is where it's kind of crazy, right? You would say, oh, less jobs, isn't that bad economically? Wouldn't that be bad for the stock market? No, it's good for the stock market. The stock market looks at a very short time frame, basically 3 to 6 months out. And in the next 3 to 6 months, this tells us that the likelihood of Fed rate hikes, additional Fed rate hikes, are now diminishing more and more. And the market loves it. The market loves relatively cheap money, at least money that's not going to get more expensive. The next number here, unemployment rate, ticked up. 3.8% was expectation, coming in at 3.9%. So again, a higher unemployment rate. Weirdly enough, the stock market wants more people unemployed because it takes the Fed out of the equation. It's just that simple. Now, you guys may say, wow, if this trend continues, are we going to be in a recession? Yes, we are. That eventually will be bad for the markets, bad for stocks. But the markets, again, and this is so important to understand, the the markets look 3 to 6 months out. And 3 to 6 months, the only thing the market cares about right now is that we do not see the Fed continuing to hike rates. The 10-year, again, we're going to go to that chart. That's an amazing chart, folks, by the way, because we just hit my target. I gave the target earlier this week, and we just hit it on the 10-year yield. We'll touch base on that in just 1 second. Average hourly earnings. This is another positive, right? Markets had expected 0.3% uptick in hourly earnings. What did we get here? 0.2%. So people making a little less money than they expected. Again, for inflation, that is a positive thing, right? In general, people want to make more money. That's obviously the goal. But the market specifically, to get the Fed out of play here, to take them totally off the table, they want to see people making a little less money so they don't have as much money to spend on goods. Remember, supply and demand. The more people buy things, the higher price will go to meet that supply and demand curve. All right, so that's what we have here, guys. Again, in general, this was a positive for the market. This was a positive. This was a positive. You get a good number. You get a good number. That's what it went on here today, folks. So anyways, let's get on to some other things. All right, next we have to go to the charts here, guys. Take a look at the 10-year yield. And this is awesome, guys, because again, you know, the levels I am giving you in these game plans they're not always going to be accurate, but I'm playing the probabilities. I'm playing probabilities based on my methodology that will give you a 70 to 80% success rate. Here's another one right here, guys. Again, I talked about this level now being the new high on the 10-year, which was 5%. Again, we initially had this one. This was a topping tail. It failed. But once we hit 5%, okay, new level, reversal took place. We know the reversal took place here. We got the bear flag pattern, right? That classic pattern there said, okay, yields are going to continue to fall. This is what happened, and look at the results, right? Look at the drop. Where did I say this was going to go? Here's your target, and here's your short-term target being achieved, 4.55%. I gave you guys literally earlier this week for a target and late last week. Here we are on the 10-year yield at 4.535%. So it's even a little bit lower than what I gave you. Remember, just a week ago, we were bubbling up against 5%. Now, check this out, guys. This is a crazy story. Well, this is very common, but you guys know I run In the Money stock service, right? It's called Verified Investing Alerts. I give out my trade signals, my stock alerts, basically, and my ETF alerts. And basically, over the last couple weeks, I was heavily going into long trades. I was buying things, buy, and also covering some of the shorts that I had out there. I got a call, or the support staff got a call here, and it was, Gareth, I got to tell Gareth I got to cancel my membership because the markets are going to collapse. It's going to crash, and he's going long right now. He should be all short the market. What is he doing? He's insane. I got to cancel. Guys, this is contrarian 101. Literally, when you get calls like that, and listen, I know you guys don't get calls like that, but when your buddies are saying something like that to you, you have to listen. That made me even more bullish. We were going to get a bounce here. We talked about it on the S&P chart. We talked about it on the NASDAQ chart. We even talked about how if yields fall, that gives a reason. There were too many bears out there. I talked about this, right? I said way too many bears right now. Expect a bounce. That's exactly what we got in the markets. Markets continuing to bounce today because the yields are lower.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.